Hi ladies and gentlemen, I'm Renee Springstead with Fross and Fross Wealth Management and your August 14th market commentary. And can you believe it's August already? Where's the year gone? The good news is here in Florida, we can believe it's August because as soon as you walk outside, there is no doubt about it. Hopefully it's a little cooler in the upcoming weeks, but we'll see what happens, right? So I think some of you might be wondering, what happened to that widely predicted recession that was supposed to wreak havoc on the U.S. economy this year? Well, it might be happening, just not all at once. See, different sectors are experiencing downturns at different times. And what's the result of this is it's a rare case of a rolling recession, where instead of one giant recession hitting all at once, there's a lot of little mini recessions going on in various industries at various times. So think about it, residential housing, right? When the Federal Reserve started raising those rates, there was a 40% tumble in new home sales. And then that started recovering, but commercial real estate started decreasing. The semiconductor industry, that was plagued by broken supply chains and lower demand last year. But then 2023, semiconductors are just on a winning streak. The manufacturing index, on the other hand, is actually, we're seeing two different downturns in the manufacturing index. And the first was expected during the pandemic, but this second one, we're starting to see a little bit of a slowdown in the manufacturing index. So that's an area we're keeping our eye on. But that all brings up a question is, can this full-blown recession be avoided? And if these contractions in one sector are counterbalanced by recoveries in another sector, we could wind up in an environment where GDP does not turn negative, thus avoiding one of the most widely predicted recessions in history. We here at Fross and Fross in our investment committee, we are still concerned that we're going to see a short, mild downturn. However, if consumer spending doesn't crack, then this widely anticipated recession could be like a hurricane, and Jim Cantore talking about it, but it stays out to sea. So I hope that's the case. Probably unlikely, but we'll wish for the best. So some of the positive indicators that we're seeing about that is the U.S. economy grew at a rate of 2.4% in the second quarter. And we're still seeing a red-hot labor market and a healthy jobs creation and unemployment rate of 3.6. That's near a 50-year low. So on the other side of the good news is the recession debate about the yield curve. Many economists feel that an inverted yield curve is the most reliable recession predictor that we have, since an inverted yield curve has predicted every single U.S. recession over the past 50 years. And right now our yield curve appears to be screaming for a recession. And it's been that way though for more than a year. So could this time be different? Well, actually, if the Federal Reserve keeps up with their mandate of really looking at inflation as their number one priority, we've seen it go from 9.1% drop down in just the last 12 months, unbelievably. And so perhaps if they change their pace and their direction of it, because inflation has met their target, maybe that will help us stay outside of that recession danger. What brings up the next question is, can we expect a soft landing? And the answer to that question is we don't know. A lot of recessionary fears, because of them, many companies have started pulling back because of the anticipation of a downturn and become very strong in their cash positions. When you also have that going on with the Federal Reserve raising their interest rates and having a nice steady access and a nice steady stream of fixed income, it's making it so that retirees pulling out income don't have to take on as much risk. So we hope that you're able to take advantage of some of that high yield that's out there in CD rates. If you find that you are accumulating too much cash in your accounts, not earning anything, as always, give one of your advisors here a call and see. We have very attractive rates on hundreds of CDs right now. So, as always, thank you very much for joining today. If you have any questions, give the office a call and try to stay cool.